All right, so welcome to another video. Today, what we're going to do is we're going to talk about something serious. It's going to be about Tesla and how to day trade Tesla. So how the heck do we do something like this? And I often see this done so incredibly wrong, and I don't really like doing too many day trading videos because people get sucked into the get rich quick things. And also the more money you have, usually you don't get into day trading as much because let's just say dealing with $10 million. You can't put $10 million into one day trade because the options burn and decay. So anyway, you're normally going to spread your money. So that's a lot of the things that we go over in coaching students, people I work with, financial advisors that I even teach and coach, option tradings. So anyway, when we go into this, let me share with you some insight. Most people go in, let's say we're going into Tesla, we're buying a single option. The big problem with this is you're burning theta, 44 theta. Now this option is 3 days out right now at the time of the filming of this video, so I got 3 days out. The issue with this is, look, I bought it for about $1.09. Now it's $1.27, so it is worth some. And you might say, and you might feel good, oh man, I'm up 18 bucks. Yeah, I got this one option contract. Most of the time, you're not going to go to the moon in a stock like this. Okay, it's not going to happen. You're burning 44 theta, so that's in the day. So if this doesn't happen in the next couple days, I'm screwed. So the break even is at 176.34. So how does that work out? So people that get this think that they have a probability of about 25 because of the delta of 25, but that's not necessarily the case. Look, I got 175. Okay, so if I've got 175 is the strike, current price is 168. So what I need to do is take 175, add about $1.20. Let's just add about $1.20. So I got 176.20 is kind of where I need it to go. And the chance of that is actually the delta is much smaller. So I actually need it to get to there. And if you look at the break even here on the one that I got, there it is. That's why the break even is right there at 176. That's it. It's not 175, it's 176. So this is not necessarily the best way to do the day trading. Or even if you see people doing singles like this, anybody that's buying singles less than 15 days, they probably don't know what they're doing in the market or teaching things really poorly. I won't nag on them because it's not everybody, but in many cases, you don't want to do stuff like this. Selling like in those cases, unless you're understanding what you're doing. So the better approach maybe if you're kind of new and you want to do some day trading stuff and you want to do short duration. Again, there's a lot of if you want to do all of that stuff, then in that case, be a little more careful. And the smarter approach to maybe doing this would be, hey, you want to go bullish, you want to go bearish, pick a direction. Okay. So you could do for a counter trend bounce up or down. Because when you look at a 50-50 shot, a coin flip here, what we can do is go here and say, hey, we believe the stock's going to go up. So we'll go ahead right at the money and we can go in and do an at the money spread. We'll do about a $2.50 spread, pays about $1.33 is what we're buying it for. And now our risk is about the same as the option we had. We paid $1.09 for the other option. So if I look at this option, $1.09 is what I paid. This one, as I buy a vertical, I'm paying $1.33. Pretty close. But what's the difference here? The difference here is I don't expect it to go to the moon. So my risk is a little more defined. But all I needed to do, think about it for a minute, all I needed to do is go a little bit higher, just $1 or $2. I don't need it to go to the moon. I just need to go a little higher and then just kind of hang out there for a day. My theta right now is nothing. My vega is nothing. I have no variables there to worry about. And if this just goes up a little bit, remember, in a couple of days, okay, 1 day, 2 day, 3 day, 4 day, there it is. It's expiring. So already, as long as it just hangs out there, I'm good. So that's the big difference between doing what most people do, doing singles, and doing a vertical. So we're going to go ahead and pop in this vertical right here, put it in that account, and we'll reset this back to today. And now we've got ourselves a little position that we're working to see if we can get filled. Voila. Let's see. Let's work it 133, cancel, replace. Let's see if we can get 134. Again, we're doing bullish on this one. And don't let that fool you. That's not that I'm always bullish. Actually, I have quite a handful of, in this account, a handful of shares that are short. Disney, haha. Disney. So that one's quite short. I got a couple other shorts. Moderna short. Roku short, Starbucks short. So there's a few things there that are short. And anyway, long story short, yeah, I got a few things short, but that one, Tesla, we're just taking a bullish shot because it's just easier to learn from a bullish standpoint, because most people are kind of bullish. So we'll go, let's try 136. The more volatile stock, maybe spreads are a little funky. Okay, so there we go. We popped that trade on. There it is. Now it's going. All right, so I got this trade going right now, and I already want to set a analyze closing trade. I'm already going to try to sell it. I'm going to try to sell it at, let's see what I want to do. Probably try to make 40 bucks on it. Not a lot on here, but just the way you do it. You could also do it on a percentage basis. So you bought it for, let's say you bought it for $1.35, so it's $135. $135 times, let's say, about 50%. $1.35 times 1.5, it's 2.02. So somewhere around $2 is where I want to sell it. Let's go 2.05, and then what we can do is just push it through, and then we'll edit that trade and set it as a good till cancel. So now we are good to go. That one's sitting there in the queue, working order to close out. So anyways, that's a better thought, in my opinion, for doing some day trades or doing a trade like that, especially shorter duration, because what's going to happen is if you're trying to sell a bunch of options, like let's say you're doing selling, like you're selling a ton of options here, you know, let's say you're selling $200,000 worth of options. All of a sudden, if you get one nasty move against you, I mean, you could get a huge assignment risk right there, and that could be a big problem. So in this case, you're a buyer of options. It's a lot more safe. You've already predefined the risk, the amount you're willing to lose with the spread, and you just need it to go up a few bucks, and then you could start getting out. Now, you could scale out as well if you like, but it's a personal choice. You know, scale in, scale out. This is a short duration, doing some quick trades. It could be for the day, it could be for a couple of days, and then you're out. Just 1 or 2 days and you're out. So anyways, that's all we're doing with this trade, and just setting it up correctly as far as buying a vertical spread rather than buying single option contracts for a day or two pop, because with those singles, they can really burn you. So be a little more careful with those and learn properly and accordingly. All right, I'll see you in the next video.